ArcelorMittal South Africa's full-year profit declined by 62% due to weaker steel prices and demand at a time when costs were driven up by significant price increases of key inputs such as coal. On the other hand, it added that international prices of coking coal, a key ingredient in steelmaking, had gone up by that particular increase, and that is definitely having pressures when it comes to the company's financials. But for more, we are joined by CEO Kobus Verster, who is the CEO of ArcelorMittal South Africa. Kobus, thank you so much for your time. I mean, let's talk about the context and the market, and I suppose also the operating realities under which ArcelorMittal is reporting these full-year numbers.
Yes, good afternoon, Natasha. I think on a high level, one has to start at volumes. I mean, obviously, our sales volumes were down by 13%. And then if you look at the price-cost squeeze, prices were year-on-year up 17%, coming down in the second half, while the overall cost was up 34%, of which raw materials itself, which is about 45% of our cost base, were up 38%, largely due to the imported hard coking coal contributing a 117% increase on a standalone basis. And I think you should then link it to the external disruptions that we've experienced during the year, from Transnet, have a major impact on our profitability, and then we also had a strike in ourselves, and then load shedding, although not directly impacting us that massively, but it does impact demand and our customers.
We'll get to the load shedding aspect. For the benefit of our viewers, perhaps you can take us through some of the key commodity price trends that you're seeing.
Yeah, I think if you look at the biggest imported portion is hard coking coal, and internationally that price has increased 62% in rand terms, in dollar terms. In rand terms for us, the increase was 117%, which also led to a later consumption of some of the more expensive stocks. And then you had your dollar-based commodity indexed, which is also a large part of your cost base. That increased on average by 51%. On the positive side, we were able to reduce our fixed cost by 11%. So fixed costs came down substantially year on year, which after also reducing it substantially over the past few years. So those are the big cost trends that impact our business.
When you look at the issue of rail disruptions, especially in relation to Transnet, I think that's been a major factor when we look at some of your peers as well. Is there a way to reduce that risk? What are the conversations like between yourself and I suppose especially transport freight rail?
Between us and Transnet Freight Rail, I mean, there's very high level continuous engagement to try and find operating solutions in the immediate short term. And I must say that is reasonably successful, but still delivery is substantially below the plans. So in the short term, I think they have to resolve the issues around the loco spares. That will make a dramatic difference in the short term. Longer term, I think it should open up for private participation in the networks. I think that's ultimately the only longer term solution. But in the short term, I think that is a bit difficult. So in the short term, we need operational improvement, and that is the spares, locos, and rolling stock need to improve.
How optimistic are you when you look at the China reopening story, as well as, I suppose, even consumption for 2023?
I think if you talk about reopening in terms of the Transnet, I think longer term, fairly positive. I think it's something that needs to happen. In terms of prospects for the year, I mean, we saw steel prices already at the back end of Q4 starting to improve. So we are at reasonably higher levels than where we ended the year. So there's a positiveness. I would assume that we may see some better H1 demand side in South Africa. But ultimately, we need economic growth. Steel consumption in South Africa is 20% lower than 7 years ago.
Right, before I let you go, just quickly, we have the State of the Nation address later this evening. What are you hoping to hear?
Well, I hope to hear that there's some definite actions on energy. Infrastructure spent, I think, is definitely required. And then on Transnet and how these will quickly assist in economic growth that can ultimately lead to job creation. I think that's what we need. We need growth, we need job creation, we need people to have food on the table.